So, very good afternoon, friends. Let's quickly take a look at one question from business valuation. The main reason behind this is illustration 1 was asked in May 25, and illustration 2 and 3 was asked in September 25. So, there are a lot of chances for this question coming in an exam, and even though this topic, that is economic value, it is fairly easy one, but if you have seen this problem, then you can solve it and won't go in the exam. So let's quickly check it out. So the P&L statement balance sheet is given of A Limited. The figures is in lakhs. Pay minute attention to every line in the problem so that you don't miss it on the lakhs and all those things. And EBIT, EBIT, so the final earnings after taxes rupees 280 lakhs, and your balance sheet total is rupees 1008 lakhs. So assume bad debts provision of rupees 20 lakhs is included in the SGA, and same amount is reduced from trade receivables and current assets. Also assume the pre-tax cost of debt is 12% tax rate is 30% cost of equities. Shareholders, that is nothing but shareholders expected returns 8.45%. So your first step is computation of net operating profit after tax. So EBIT is given, tax rate is given, and be very careful, the non-cash expenses should be added, so that will give you no bad as rupees 307 lakhs. If they missed to mention it here, you should mention the rupees in lakhs. And next step 2 is computation of invested capital. So the total assets less non-interest bearing liabilities, so that is 400 current liabilities and provisions, and then add the non-cash adjustment, that is 20. The non-cash expenses, the non-cash adjustment is a key item, so that will give you the invested capital as rupees 920 lakhs. It is assumed that the current liability is inclusive of 100 of tax liability, so that note is also carries marks, so be very careful. Next is computation of WACC, that is weighted average cost of capital. So WACC is nothing but cost of equity and plus cost of debt. So in this case, WACC will be 800 by 900 plus 100 by 900. The rate is pre-tax to post-tax, that will give the WACC as 8.44%. So next is computation of capital in charge, that is nothing but invested capital into WACC. Both the computations we have made, so that is 920 to 8.44%. That will give you 77.65 lakhs. So computation of last step is computation of economic value added, that is nothing but adjusted no VAT minus capital in charge, so that is 307 lakhs minus 77.65 lakhs. So your economic value added is 229.35 lakh rupees. So very good question, fairly straightforward, but it's important you practice this question within 3 minutes. We are able to finish it up. Before we close things up, just want to share one important thing. So economic value added, it was asked a 6-mark MCQ in May 24, and also in November 24 also one question came. So it's been a couple of attempts where economic value added was tested, because the previous attempt financial leverage aspect was only asked. So a lot of chances for this kind of question coming, so make full use of it. All the best, keep on best wishes.